One day, debt ceiling talks are moving forward. The next day, they're moving back. 2 steps forward, 1 step back. Markets are going absolutely crazy over the debt ceiling, and on Wednesday and Thursday, we finally broke out of the range that SPY has been trading in for the past 6 weeks. It was a major move. We had a short squeeze going into Wednesday and Thursday, and SPY is finally above $420. That is, until we didn't get any negotiations on the debt ceiling on Friday. Don't have any updates as of Sunday, so the markets might be pulling right back to where they were before, back into the range next week. Let's go over what happened though. On Monday, we started out with a really bad New York Empire State Manufacturing Index report coming in at negative 31.8 versus negative 3.7 expected. And this is down from 10.8 in the month of April. So a sharp decline in the New York Empire State Manufacturing Index. And this has been pretty much across the board, where we've seen every single manufacturing index coming in way negative, especially the Philly Fed Manufacturing Index. And this means that manufacturing right now is slowing down in anticipation of going into a recession. People aren't going to be buying as many goods, so the manufacturers don't feel like they need to produce as much goods. Also on Monday, you had Fed Bostic coming in and saying that rates may have to continue to go up. He didn't clarify whether or not he's for or against 25 basis points at the next meeting, but this does kind of allude to him being on the side of 25 basis points. And he also said that he does not expect any cuts until well into 2024. So not only December 2023, he's saying that we might not even get rate cuts until maybe June or later in 2024. Whereas right now, the markets are expecting 2 rate cuts by the end of the year, from a target fund rate right now of 5% down to 4.5% by December of 2023. On Tuesday, we had core retail sales coming in at expectations at 0.4% versus negative 0.5% for the month of April. So this is a good improvement for core retail sales managing to go back up. That means that the consumer is starting to spend a little bit more money. But the month-over-month reading wasn't as good as we were expecting, where it came in at just 0.4% month-over-month for regular retail sales versus 0.8% expected. But this is a good improvement from negative 0.7% for the month of March. So overall retail sales in terms of core and regular ended up going up month over month, which is a reversal from last month's decline. And then the year-over-year reading came in much worse than expected at only 1.6% versus 4.2% expected. And this is actually lower than it was last month in March, where it came in at 2.42%. So retail sales on a year-over-year basis is definitely on the decline, especially with this hot inflation that we're having, with CPI still around 5%. This means that right now people are ordering about 3.5% less goods than they were a year ago. Also on Tuesday, you had a couple Fed members coming out to speak. Messer said that they are not at the hold rate yet, so that means that Messer still believes that they need to go up and increase the rates even further. And then Goolsby said that he has made no decision for the month of June. So a lot of Fed members are kind of up in the air. We do have a couple of Fed members that are in the 25 basis point rate hike camp. And by the end of the week on Thursday, the odds for raising 25 basis points at the June meeting was 40%. But Powell came in and screwed that up. We'll talk about that later. But the big news of the week is all about the debt ceiling. And Biden ended up pushing the debt ceiling talks back from Tuesday because he decided to go on a G7 trip to meet all of the G7 leaders. And he said that he would be back Sunday in order to give a press conference regarding the debt ceiling talks. On Wednesday, McCarthy said that there will be absolutely no tax discussion in the debt ceiling talks. Meanwhile, Biden doesn't want to negotiate on cutting any spending. So Republicans don't want to increase taxes. Democrats don't want to decrease spending. So it's kind of hard for them to meet in the middle right now. But on Wednesday, Biden gave a press conference saying that they are making progress on the debt ceiling talks, when just a couple days later, McCarthy ended up walking that back. Meanwhile, though, on Wednesday, SPY ended up going up by 1% that day after going above 413.50. This was a critical resistance level that we've been below pretty much all of the last month. So as soon as we went above 413.50, SPY ended up squeezing and ended the day up by 1% on Wednesday. Thursday was the same story. We went up another 1% after squeezing above the 418.21 level, which is a Fibonacci retracement, going from the bottom of COVID to the top of the bull market. So this was an important level to look out for. Markets saw this and started buying up right away, where SPY ended up going above $420, finally breaking out of the range that it's been in for the past 6 weeks. And we had a slew of data coming out on Thursday. We had continuing jobless claims at 1.799 million versus 1.818 million expected. This is a slight improvement from 1.807 million as of last week. And then the initial jobless claims came in at 242,000 versus 254,000 expected, down from 264,000 as of last week. The Philly Fed Manufacturing Index came in negative again. Surprise, surprise. Negative 10.4 versus negative 19.8. And this is an improvement from negative 31.3 a month ago in April. But the Philly Fed prices paid ended up rising to 10.9 versus 8.2 in April and 8.1 expected. So manufacturers are paying really high prices right now. And if they're paying high prices on the input, then the output, selling those items to us, is going to go up as well. So higher prices paid for manufacturing gets passed down to the consumer price index. So likely we're going to see a higher consumer price index or CPI in the next couple of months. On top of all the data that we got Thursday, we had Fed Logan coming out and saying that the current data does not justify a pause for the June meeting. So again, we are having another Fed member coming out and saying that they're in the 25 basis point rate hike camp. But on Friday, Powell ended up walking all of that back after what everybody was saying about raising 25 basis points at the next meeting, saying that rates may not have to rise as much given credit stress that we're experiencing right now because of all the bank failures that are going on. So Powell basically left 0 and 25 basis points still on the table, and the odds for 25 basis points ended up dropping from 40% on Thursday to 17% on Friday after Powell's comments. Powell also said that he has not made any decision on whether rates are sufficiently restrictive. So he's kind of talking with both sides of the mouth. We might raise, we might not. We really don't know. Again, kind of like he did for the FOMC meeting where he didn't give any forward guidance. And then finally, Sunday, today, Biden ended up saying that he's looking into invoking the 14th Amendment in order to lift the debt ceiling. So there's been no negotiations on the debt ceiling talks. We haven't made any progress. So that's all your macro events for the week. And then for earnings, you had Target reporting earnings at 205 versus 176 expected. So a pretty good beat there. The revenue ended up coming in at $25.32 billion versus $25.25 billion expected, so another small beat. And then they said that their inventory shrink might be reducing their profits this year by $500 million, mostly due to theft and organized retail crime that's going on. So whenever things are kind of getting screwed up in the economy, whenever you have high inflation and people can't really afford to buy goods anymore, they're going to start stealing them. And then once unemployment goes up as well, usually unemployment and crime have a high correlation with one another. So basically, Target is saying that they expect theft to continue to rise in the coming months, which is going to decrease their profitability. And then for AMAT, their earnings per share came in at $2 versus $1.83 expected. The revenue at $6.63 billion versus $6.37 billion expected. And they said that they expect to outperform the semiconductor market or the rest of the companies in the semiconductor market for the year of 2023. But meanwhile, their stock actually dropped by about 2% this week. They beat earnings, they beat revenue. They didn't make any mentions of artificial intelligence. So of course, their stock ended up selling off just a couple of percents. So that's your recap for last week. And then for this week, you're going to have a bunch of Fed members speaking on Monday, with Fed Bullard speaking at 8:30, Fed Logan speaking at 9 o'clock, Fed Barkin speaking at 10:50 a.m., and then Fed Bostic speaking at 10:50 a.m. as well. And then Zoom is going to be reporting earnings after hours on Monday. Tuesday, you're going to have building permits coming in at 8 a.m. This is just regarding housing, which really doesn't have much impact on the market as of right now. But we are going to have the manufacturing PMI. That's going to be an important report coming out at 9:45 on Tuesday, where it's expected to come in at 50 versus 50.2 as of April. So they're expecting a small decline in manufacturing PMI. And then for the services PMI, they're expecting this to decline as well to 52.6 versus 53.6 as of April. If we do see services PMI starting to pull back from being really high recently. That means that maybe services inflation will start to wane off. But as of right now, services PMI is still doing pretty well. That means that services inflation will continue to rise, which is exactly what the Fed is fighting against right now. And then for earnings on Tuesday, you're going to have Intuit reporting earnings after tax season. They should be doing really well. Usually this earnings is a lot better than the other 3 quarters of the year, and one that's more anticipated than other quarters. So definitely going to be watching that for this week. And then on Wednesday, you're going to have Treasury Secretary Janet Yellen speaking at 10:05. And then you're going to have the Fed minutes release at 2 p.m. on Wednesday. Now, usually the FOMC minutes really doesn't have much impact because it's just a reiteration of what was said at the press conference. But if there is any changes from what was said at the press conference and the Fed minutes coming out on Wednesday, then you could have some volatility in either direction. And then the big earnings of the week, the one that everybody and their mother is going to have their eyes on, is going to be NVIDIA, reporting earnings on Wednesday after hours. And then you're also going to have Snowflake. On Thursday, you're going to have continuing jobless claims, where it's expected to come in at 1.8 million versus 1.799 million as of last week. You're going to have GDP coming in, where the preliminary is expected at 1.1% versus 2.6% as of last quarter. And then the initial jobless claims is expected to come in at 250,000 versus 242,000 as of last week. And then for earnings, you're going to have Best Buy, you're going to have Costco, and Ulta. I'm most interested in Ulta and seeing how they do on their earnings report, because the last couple of earnings reports have been really good for the company. The stock has been trading near all-time highs. So this is definitely going to be an important one to watch for Thursday. And then Friday, you're going to have a bunch of data coming out. You're going to have core durable goods at 8:30 in the morning, where last month it came in at 0.2%. You're going to have core PCE, where it's expected to come in at 0.3% month over month for the month of April versus 0.3% for the month of March. You're going to have the year-over-year reading expected to come in at 4.6% versus 4.6% for the month of March. The regular durable goods order, where it's expected to come in at negative 1% versus positive 2.8% as of last month. And then you're going to have the regular PCE, where it came in at 4.2% year over year for the month of April, for the month of March, and then 0.1% for the month of March. You're also going to get personal income and personal spending expected to come in at 0.4% and 0.4% versus 0.3% for personal income and 0% for personal spending. So they're expecting personal spending to go up month over month, and then personal income to see a small increase as well. And then finally on Friday, the last big report that you're going to get, it's going to be the Michigan Economic Report, where we're expected to see 3.2% for the 5-year inflation expectations versus 3% for the month of April. And then the Michigan consumer expectations is expected to come in at 53.4 versus 60.5 for the month of April. And then we're looking at the consumer sentiment, which is expected to come in at 57.9 versus 57.7 for the month of April. And then finally, the last big one is the 1-year inflation expectations, where it's expected to come in at 4.5% versus 4.6% for the month of April. Last week, this was a really big surprise to the downside. Pretty much everything came in worse than expected. So if that trend continues, then we might see a lot of volatility on Friday. And then for the earnings this week, I'm going to be watching Intuit, where they're expected to see $8.48 earnings per share versus $2.20 a quarter ago, $6.70 a year ago, and over the last 8 quarters, they've done an average of $2.60 earnings per share. Their revenue is expected to come in at $6.1 billion versus $3.04 billion as of last quarter and $5.63 billion a year ago. And over the last 8 quarters, they've done an average of $3.14 billion in revenue. For NVIDIA, they're going to be reporting earnings on Wednesday, where they're expected to see 91-cent earnings per share versus 88 cents last quarter and 118 a year ago. And over the last 8 quarters, they've done an average of 87-cent earnings per share. For revenue, they're expected to do $6.52 billion versus $6.05 billion a quarter ago and $8.29 billion a year ago. And on average, they've done $6.74 earnings per share for the last 8 quarters. And then finally, Ulta, the last earnings that I'm watching for the week on Thursday, is expected to report $6.81 earnings per share versus $6.68 a quarter ago. So another record earnings per share expected versus $6.30 a year ago and $5.25 over the last 8 quarters. The revenue is expected to come in at $2.81 billion versus $3.23 billion a quarter ago, $2.35 billion a year ago. And on average, they've done $2.36 billion in revenue for the last 8 quarters. So those are the 3 earnings that I'm watching for this week and the price levels that I'm going to be watching for them. For NVIDIA, this is expected to be in a range between $289.57 to $335.71, with supports at $310.50, $303.20, and then resistance at $313.65 and $323.75. If they end up beating their earnings and beating their revenue, I expect their stock to be above $320 by the end of this week. If they beat earnings, miss revenue, I expect their stock to stay above $310. If they miss earnings and beat revenue, I expect their stock to be above $300. And finally, if they end up missing earnings and revenue for this quarter, their stock could be slipping below $300. For Intuit, the expected range is $423.34 to $468.72, with some support levels at $437.96, $422.21, and $413, and resistance at $447.84 and $460. If they end up beating their earnings, beating their revenue, I expect their stock to be above $460. If they beat earnings, miss revenue, I expect their stock to be above $450. If they miss earnings, beat revenue, I expect their stock to stay above $435. And finally, if they miss earnings and revenue, I expect their stock to be below $430 by the end of the week. And then finally, Ulta, the last earnings that I'm going to be watching for the week. The expected range is between $459.18 and $522.92. with supports at 480 and 473, and then resistance at 500, 512.02, and then 521.80. If they end up beating their earnings, beating their revenue, I expect their stock to be above 510. If they beat earnings, miss revenue, I expect their stock to stay above 500. If they miss earnings, beat revenue, I expect their stock to be above 480. And if they miss both earnings and revenue for the quarter, I expect their stock to slip below $475. So those are the 3 earnings that I'm watching for this week. And for SPY, the expected range is between $412.20 and $425.04, with support levels at $418.21, the Fibonacci retracement from COVID to the top of the bull market, $416, $413.50, and then $412. And then resistance at $419.40, $421.22, and $425.50. So those are your levels to watch for this week. After no negotiations on the debt ceiling, I do expect us to pull back a little bit, probably on Monday. And the price levels that I would be watching for any profit taking would be below $418.21 and then $416. If we drop below $416, we could have a decent move to the downside. But that's all I got for y'all this week. Hopefully this video was useful. If it was, show some love, leave a like. Thanks for making it to the end, and thank you to all my patrons and my channel members for the support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.